Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. Wait and see. Boris Johnson holds off ordering stricter curbs before Christmas amid a surge in Omicron cases. The variant becomes dominant in the US. The sell-off abates. Global stocks advance on vaccine optimism and signs Biden's economic agenda could yet be revived. Plus, lira whipsaw. The currency is mixed today after its biggest surge since the 80s on new support measures from President Erdogan. So we'll take a look at the futures then. A sense of cautious stabilization bleeding into these markets after what we saw stateside, another close in the red. The S&P 500 posting the longest streak, the worst streak of three-day losses since September, lower at 5 of the last 6 sessions, but a bit of a turnaround in the futures stateside, but also here in Europe as well, as investors continue to weigh up the impacts of Omicron. Moderna coming out saying its third booster is effective and increasing resilience to that disease. The FTSE 100 is opening, it's currently up 0.6%. The Spanish IBEX is gaining 1% as well. We knew that the futures were looking at a positive start here in Europe after a close in the red on Monday. Whether or not this can be sustained as investors take profits and assess, of course, the monetary policy response, Omicron, and what is happening stateside in terms of the politics and Biden's economic agenda. The CAC 100 is gaining 1%. We can switch it on and look at the cross-asset board. As I mentioned, the futures stateside are pointing to gains after losses yesterday. Gains of 0.6%. The US 10-year yield is back to 142. Brent and oil is higher today after losses of around 3% yesterday, gaining 0.4%, $71 a barrel. So not close to making up the losses that we saw yesterday, but nonetheless on a positive trend today. Part of that will be linked to the vaccine and treatment news around Omicron. Still trying to digest just how severe this is in terms of the data that's coming out of South Africa and here in the UK, where cases are spreading very quickly. The Turkish lira, once again, back in focus. What a couple of sessions we've seen for this currency. President Erdogan coming out and offering support to depositors and holders of the lira. We'll see how long that holds, but that currency has just seen the most incredible moves. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Sources tell us Elliott Investment Management and Vista Equity Partners are considering a joint bid for software maker Citrix. Elliott already has a 10% stake in Citrix. Vista is said to be considering using its portfolio company Tibco as part of the transaction. Citrix, which is valued at around $10.4 billion, has been exploring options, including a potential sale. Oracle has agreed to buy Cerner, a medical records software provider, in an all-cash deal worth just over $28 billion. In its biggest ever deal, Oracle will pay $95 a share, a 20% premium over Cerner's market value last Thursday. Insurer FWD has officially scrapped plans for its US IPO. The company, owned by Hong Kong billionaire Richard Lee, wrote to the SEC asking for consent to withdraw its filing, saying it's considering other alternatives. FWD has switched its focus towards a potential Hong Kong listing after its US plans were held up by intense regulatory scrutiny. In a victory for organised labour, Starbucks has agreed to negotiate with its first US union at a store in Buffalo, New York. The National Labour Relations Board certified the union election on Friday, requiring Starbucks to begin collective bargaining. The development sets up potentially messy negotiations between the workers and the company, which could last for several months. That's the Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. OK, let's get into the key market drivers then with our markets editor, Christine Aquino. Christine, a bit of a revival in the sentiment here, positive sentiment for markets. We were talking to Mark Cudmore on Bloomberg Radio earlier. He said, look, this is not an environment where really you want to be making convicted calls as we lead up to year end. I guess the question is how much sustainability there's going to be in the uptick that we're seeing across these markets.
That is the big question, Tom. And I think the answer is not a lot, especially because we're heading into year end. Liquidity is getting to be very, very thin. And we're really just seeing signs of any turnaround in markets being very short-lived and still very much vulnerable to any turns in sentiment, whether that's brought on by new news about Omicron or news about the economic plans in the U.S. So anything that kind of shifts sentiment one way or another, I think, is what's driving markets today. But apart from that, in terms of the longer term factors, it's very difficult to come by, especially in these last few days of the trading year.
How are markets assessing the Omicron risk at this point?
Well, Tom, I think it is very much headline driven at this point. We witnessed that yesterday because, you know, what markets started trading very, very risk off at the start of the week. But then we did see a little bit of a reprieve after we got that news from Moderna showing encouraging signs from its boosters. And so that gave risk assets a little bit of relief. But then, and of course, that continued as well when in the US we saw some indications from the White House that perhaps Biden's economic revival plan isn't yet dead in the water. And so, you know, a lot of these gyrations very much subject to what we're getting in the headlines. And I think this is very much the nature of trading right now, with liquidity as thin as it is and investors exiting the market as they start their holidays. I think this is very much the sort of environment that we could expect as we head into 2022 and finish up the year.
And the sector that really took a pummeling yesterday was travel and leisure. Not a big surprise given the restrictions we've seen put in place. Today, top of the list, we're looking at basic resources. Oil is back, posting some gains, but very heavy losses for the oil sector yesterday. How do you see it breaking down, the market action sector by sector? Basic resources currently up 2%.
And I think that's very much a function of the turnaround Tuesday environment that we're in today, Tom. And I think moving forward, investors are really going to have to take a hard look at what this all means for demand, right? And I think the worst case scenario, as we kind of saw play out over the last couple of weeks, is that we're going to see more lockdowns spreading throughout Europe and the rest of the world. And we're going to see a repeat of the early days of the pandemic when no one was leaving their houses. No one's driving their cars into work, and the demand really just ground to a halt. That's the worst case scenario that markets were considering, and perhaps what drove the sell first and ask questions later sort of attitude that we saw in markets the last couple of weeks. But then after that kind of initial reaction, I think investors are really stepping back and assessing, does this really mean longer term demand destruction, similar to what we saw in the early days of the pandemic? Or is this kind of a short-term blip that could improve over time as, for instance, the booster programs get underway, or we get more encouraging data from vaccine manufacturers in the efficacy of their vaccines? Anything like that that could help shore up sentiment could really change the story here as far as the assessment of demand goes.
Another factor that I would have on the list for oil certainly would be what's happening in China, the shift to an easing policy from the central bank there, with that benchmark, what is essentially the benchmark rate being cut for the first time since April 2020, how that plays into the oil sector. Again, $71, close to $72 a barrel on Brent, so just a modest gain of 0.5%. Have we heard anything from OPEC Plus around this supply-demand pressure that we're seeing, the supply-demand dynamic and how that's adjusting?
I think we haven't seen any indications from OPEC Plus, and I think that would be the most interesting thing to watch moving forward is, of course, this rests with them in terms of controlling that supply-demand dynamic and how they're going to respond to this. I think it'd be very interesting to see, again, if their assessment of the implications for demand from what we're seeing in terms of the developments in lockdowns and government's responses to Omicron, is that something that they're going to have to respond to very forcefully with a very decisive set of measures, or is this something that they would be willing to kind of sit back and let it play itself out and see, give it a bit more time and see how it plays out as far as the demand picture goes? I think it's very interesting as well what you highlighted, Tom, what we're seeing in China. Again, this is the world's second largest economy, pivoting to easing mode, just as the rest of the world. The U.S., for instance, and a lot of developed markets are moving to a more hawkish tilt. And I think that's going to be a very interesting source of tension heading into 2022, because it's definitely a big deal when you have, again, a major consumer of commodities and global goods pivoting to easing and really giving its economy the support that it needs. I mean, you've got to think that that would be worth a lot of, at the very least, worth a lot for global sentiment, especially because that's counterbalancing the hawkish note that we're seeing from the US, from Europe, and a lot of major economies.
Few things talk uncertainty more clearly than the lira, and it's just gone from 18 yesterday, which was a record low, another record low, to currently 14. It's lower by just over 6% as things stand. The intraday chart is remarkable if you look at it. What have we been hearing from officials and from President Erdogan, and how that plays into our views on the Turkish lira?
Well, of course, we've heard overnight President Erdogan's plan to implement some measures to protect savings from the lira's fluctuations. And I think that's very significant, because what we've seen in terms of the gyrations in the Turkish lira has really impacted people on the ground, consumers having difficulty purchasing goods because the value of their currency has just depleted so much this year. And so something coming from the government to counteract some of those impacts that we've seen this year, very significant, because of course, that's very important to shoring up support for President Erdogan's policies as well. The more support that he gets from the ground, and the more that he indicates to consumers that he is there for them and he is making an effort to protect them, that's very significant in terms of the support that he's likely to get. And of course, this also means potentially positive things for local investors who have really been a big part of the Turkish market this year, especially because we saw a lot of foreign investors exit the market earlier in the year when the fluctuations in the lira really started to get going. And so if there's something being done for local investors and local consumers, then that could potentially be a really big positive driver for the lira heading into year end.
Yeah, and the lira has weakened about 3% just in the last 2 minutes since we've been talking, Christine. Currently trading at 13.87. Bloomberg's Christine Aquino, thank you. A couple of stocks that we are focused on today as well. Rocket Internet is an interesting one. The company has discussed an offer with Elliott to take the company private, essentially for €35 per share. That is a 30% premium over Monday's close, and you're seeing that reflected in the pricing today, gaining 28%, currently up by 7 points for Rocket Internet on the back of that news. It seems we're going to be getting a final decision come February, so a 30% premium as part of that offered deal. Another stock in focus for us is AIB, the Irish government coming out saying that it's going to sell part of its 71% stake in this bank over the next 6 months, down by 0.6%. And Sanofi as well, acquiring Amylyx Pharmaceuticals for about $1 billion, saying it's going to add to the company's pipeline, down 0.3%. Okay, coming up, Omicron becomes the most dominant strain in the US. We take a look at the virus situation around the world with our senior pharma analyst at Bloomberg Intelligence, Sam Fazeli, has all the details and the implications next. This is Bloomberg.
from the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation are front and center. The workers cannot be left behind.
Yeah, but to that point, I mean, do you feel like the balance, though, has shifted? I mean, for so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
How fragile is the European energy complex?
The European energy complex has been incredibly fragile for a number of months now, and it just seems to just keep getting hit with new crises.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 15 minutes into the European trading day. Turnaround Tuesday is the way that Christine Aquino, our editor from Bloomberg Markets, has described today's action. You're seeing gains of just over 1%, partly making up for the losses we saw yesterday across the stocks 600. The European benchmark basic resources is at the top of the list on the back of stronger iron ore and oil prices gaining more than 2%. Every single sector in the green so far in the trading session across Europe. Omicron, of course, a factor for investors. It's become the dominant strain now in the US, accounting for 73% of all sequence cases. That is up from around 3%. So from 3% last week to 73% now. We continue to watch the data out of South Africa as well, of course, where this variant first was detected. Daily infections there have almost halved, though hospital admissions and deaths have risen significantly. For more, our senior pharma analyst at Bloomberg Intelligence, Sam Fazeli, joins us. Sam, always fantastic to get your insights. What do you make of this data that is coming out of South Africa then? A sharp fall off in infections, but hospitalizations and deaths, very worryingly, increasing.
Yes, good morning, Tom. So obviously it's really good to see the numbers coming down, and that's in the background, with the background of not really any serious restrictions in South Africa in terms of reducing people's contacts. So that's good news, and hopefully we'll see the same kind of trajectory in other countries. But as we've said several times and continue to stress, is that South Africa is obviously very different demographics, very different social structure, etc. So we can't just translate what happens there to elsewhere. Now, these numbers that we're just talking about with hospitalizations and deaths suddenly rising, I think we need a little bit more time to understand whether that's just a backlog of data that they've pushed into this period or what's driven that. And also to get a feel for what the percentages are relative to case counts, etc. So it's going to take some time to understand that, and whether that really changes the narrative that South Africa has continued to push, which is that is causing a milder disease. That's very important.
And Sam, on the treatment front, we've had Moderna coming out late yesterday suggesting again that their data shows that a booster from Moderna really is proving quite effective. And this builds, of course, on what we've seen from Pfizer. Where are we in terms of the booster vaccines and our knowledge about how effective they are and the treatments as well?
Yeah, so that was obviously the least surprising thing that we could have ever heard, because we've already seen data for the Moderna's third shot in independent analyses. And also we have to understand that, you know, this is just a vaccine that when you put it back in again, you get a reaction. So I'm not surprised. It's good to see that it's there. It's good to see that it neutralizes the Omicron variant better. But that's where we are. That's neutralization data. The vaccine efficacy data we have to continue to watch for from a third shot against Omicron. And also, we don't know how long this neutralization activity lasts. Is it a 2-month, a 3-month, or a 4 or 5 month story? And does it make any difference to protection against severe disease? Lots more questions to answer. A good start.
Okay, a good start. Lots more questions to answer, and hopefully you will be there to give us clarity through the days and weeks ahead. Sam Fazeli, thank you very much indeed, our senior pharma analyst at Bloomberg Intelligence. Joining us now is Janus Henderson's Investors Portfolio Manager of UK Equities, Indriati Van Hien. Indriati, good morning. Thank you for joining us this Tuesday. Let's start then with the question of Omicron and whether the markets are becoming more agile and better at pricing in the risks of this pandemic, or are we seeing a bit of an overreaction?
I think you always see an overreaction to these big headline stories. If I think about the day that Omicron was announced globally on the 26th of November, markets sort of fell 3%. But what you're really seeing from buy-side investors at the moment is everybody starting to understand that actually with every wave of COVID that we've seen, the impact on economic activity has been far lower and more nuanced than the first wave. It's really hospitality and transport that takes the hit. Goods market has adapted to remote working. It's the services market that has seen the limited flex. So what you tend to see on big negative Omicron days is that you have transport and leisure and retail stocks go down, and these stocks are now trading at a really big discount to pre-pandemic, despite the fact that their balance sheets are actually in really good order because of all the recapitalization that happened in the first wave, but also the strong trading that happened, a strong and robust trading that's happened since then. It's really that sector that has the most scope to bounce on, what you've dubbed turnaround Tuesday. So I think investors are being a little bit more thoughtful, but there's always that knee jerk on the first day that this news comes out. And as you say, this South African data will need to be interpreted more closely because the ramifications and the read across for other markets is very important. At the moment, I think that there is a view that Omicron is going to be more manageable, and that's really bullish for equity markets actually, because as new waves become more manageable and vaccines show their efficacy, we can sort of move on and COVID becomes the second headline in the market, which is what I think it is at the moment. People are looking at the COVID news flow and trying to extrapolate what that really means for inflation and interest rate hiking, which I think is the bigger driver of the market at the moment.
Okay, the pandemic is the second factor really for markets as we look ahead to the monetary policy response and inflation. We'll get more over Indriati's calls. Thank you. Stick around, please. Indriati Van Hien, of course, from Janus Henderson, and her calls on UK equities. Just in the next few minutes, and coming up, Boris Johnson, the Prime Minister of the UK, of course, locked in a debate over imposing fresh coronavirus restrictions as Christmas approaches. We'll look at the pressures UK businesses and equities could be facing. This is Bloomberg.
To cut emissions, climate-proofing transportation is at the top of the list. 20% of global CO2 emissions come from transportation. 75% of transport emissions come from road travel. And 45% of road travel emissions come from passenger vehicles. 29.4% of road travel emissions come from freight. Of the world's transportation emissions, 11.6% comes from aviation, 10.6% comes from shipping, and 1% comes from train travel.
Now, will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
Welcome back. Now here in the UK, Boris Johnson held off on introducing stricter coronavirus rules to clamp down on a surging new wave of the virus, but left open the prospect that they will soon be needed.
The situation is extremely difficult, and the arguments either way are very, very finely balanced. We agreed that we should keep the data from now on under constant review, keep following it hour by hour.
And Indriati van Hien of Janus Henderson is still with us. Indriati, what do you make of a Prime Minister that seems hamstrung on this issue, caught between his scientific advisors and the backbenchers of the Conservative Party, unable to put in place more rigid restrictions, the kind of restrictions we've seen in the Netherlands and arguably other parts of the Eurozone as well? Is that a relief to some extent for UK Corp, UK Inc.?
Well, there's definitely, a double-edged sword there. Number one, we don't go into a full lockdown, so economic activity will be less impacted. But what we're really seeing is a government that doesn't have the political capital to increase restrictions. And that could be seen as a bad thing, because unstable politics are not good for valuations and for stability in the market. But we could look at it another way. This is a government that's sort of, got its back against the wall, and it's got to do something before the election in 24. And we really think that there's been a lot of murmurings about taking UK taxes down, maybe not putting that corporate tax raise actually through, and taking income taxes down. And that would be really positive for UK earnings momentum. So what we're seeing is really the government at the nadir of its popularity, and they've got to do something from here. So double-edged sword in terms of Boris Johnson's tricky situation.
Okay, Indriati, I'm afraid we've run out of time, but we will definitely want to get you back in the new year. We wish you, those close to you, of course, and everyone at Janus Henderson, a very good holiday season. Janus Henderson Investors Portfolio Manager of UK Equities, Indriati van Hien, thank you. And coming up, it's been a monster year for M&A around the globe. We'll break down that story next. This is Bloomberg.